First of all, I have to thank Martin, because it's actually the second time that I speak after an invitation or a recommendation by him. The first time was more than a year ago at the Central St. Martin's. And also I'd like to thank Megan Watkins, who extended this invitation to me, to Royal Academy Schools. Well, yes, so it's true that I will today be putting in parallel two threads of thinking, if you will, the future and writing. The future, I guess, comes from my background as, first of all, derivatives, as a specialist in probability theory, and as you know, probability theory deals with the future, the unexpected, with probable, the less probable, the more probable, etc. After that, also, because of my career as a trader in derivatives, and derivatives, as you know, and as Martin has mentioned, I will try to explain a little bit what they are all about. So there are material pieces of paper on which you write payouts, things that those contracts, if you own them and hold them, payouts that they will produce for you in the future, contingently on events depending that will unfold in the future. So when you buy a derivative, and the derivative is a very general term. It could be a derivative on an underlying equity, or a derivative on a currency, or a weather derivatives, etc. So the underlying, which triggers the payout, can be very general, but the important, or the abstraction of it, the important thing to have in mind is that the payout of it is contingent upon something that is unknown today, therefore lies in the future, and that's why it's unknown today, because it lies in the future, and it can be one of several scenarios. All right. Now, this brings us to the other dimension, which is the written dimension, because derivatives, as opposed to algorithms that deal with probability and that deal with prediction, derivatives are material pieces of paper on which it is written what they pay out. So in my philosophy, and in the distinction that I will try to make clear to you throughout this whole presentation, in the distinction between prediction and writing, the derivative is a key element in my whole topic, because it is predicated on the future. It is traded in a market, and usually the markets where they trade are called futures and options markets. I used to be a trader in them for 9 years, and the last 5 years that I traded them, I traded on the London International Financial Future Exchange back in the 90s. And on the other hand, as I said, there are written pieces of paper, and the fact that they are materially written is what is going to be key in the distinction that I will make between probability and price of the derivative, between provision, prediction, or, if you will, what some algorithm that is supposed to predict the future can do, and what the market of derivative is supposed to do. So this brings me, and also why writing, because as Martin has said, I also wrote many articles at first, which were published in a specialized magazine, specialized in derivative industry, which is the Wilmot magazine, and published here in London. So I did that in the early 2000s until 2005-06, while at the same time, after I was finished as a trader, while at the same time running a software company in which I'm still involved today as a co-founder and president, which it's been around for 18 years now. So it's in that company that I continued being involved in the derivatives, but no longer as a user of derivative, as a trader myself, but more as a provider of technology and of pricing software to derivatives traders. So that company is still around, and I will, if we have time at the end, show you some software which we have developed, which is really the most cutting-edge software that exists today. I can say that because I know I've been showing it around to many people who are involved at the highest level in derivatives. The most advanced software in derivatives pricing. So I'll get to that later if we have time. So while in that company, I had, in order to discuss to the specialists why this technology, which, as I will expose to you, is a little bit different than what the textbooks tell you and what probability tell you. In order to explain why this is so, I had to write articles in this specialized platform, which is the Wilmot magazine, which I encourage everyone to have a look at. And there is a website, wilmot.com. Wilmot is actually a mathematician specializing in derivatives. And so I wrote a few articles, and after that I wrote a book in 2010 whose title was The Blank Swan, and the subtitle, The End of Probability. That was a very unhappy thing to do, actually a very happy thing to do also because of that subtitle. For the following 3 years, there were endless fights and battles on the forums of finance and probability where people who are specialists like me in that field attacked me because I had this daring idea of saying, well, I'll bring to you something which exceeds probability, and therefore something that you need to know and develop beyond probability theory. So obviously, this kind of arguing was not very popular among people whose specialty was probability and who were still believing that they can apply the schemas of thought of probability and prediction and algorithmic trading in banks and hedge funds. So we're talking about very serious stuff here, because it's an attack, if you will, to all the quant industry, of which I'm part, but I'm showing them what has to exceed it, which is very powerful, as you know, in banks, because banks develop it. So for 3-4 years, I had to answer every single attack that I got in that book on 2 forums, which are very specialized and very fierce forums, where people, they dismiss your argument by saying, well, and especially the book that I wrote was very dense with French philosophy. That was maybe, the good thing or the bad thing, because I draw a lot on Deleuze mainly, who you may be familiar with, Bergson. These are 2 French philosophers who have been known in their philosophy to also provide a criticism of possibility and probability. And they are also philosophers of the event. So basically, the distinction.
This microphone, because there's a noise outside.
Oh,
yeah.
Okay. So shall I leave it here?
Yes.
So shall I leave it here or hold it?
Maybe, if possible.
Okay. Okay, good. And and the 2 other philosophers who I discuss also in that book are Meillassoux. You may have heard of him. He became very fashionable also in fields who are related to art and to artistic practice. Because those philosophers who are called philosophers of the event, precisely according to my interpretation, show that what we call the event, what we call history in the massive sense of the word, what we call the future in the massive sense of the word, exceeds probability, according to me. So because of those 2, if you will, French philosophical strands in my book, I was also attacked by those people, but I managed to answer them, and the answers have provided me with material actually to write the second book, which is The Medium of Contingency. Now, to go back a little bit to what brings us here today and the story of Pierre Ménard and all that, Amy Clark, who is also an artist who I met thanks to Martin last year, and this is the book that I recommended actually for background reading. I don't know if you got hold of it. So she, at some point, wrote chapter 4 of The Blank Swan, which is here. And I'll tell you what that means, writing as opposed to rewriting or copying later. And it's by far my favorite chapter in that book, and I think that in it maybe the philosophical points that I'm trying to make are best conveyed to people who may not have technical knowledge of derivatives, but who may be more interested in the metaphysics that I will be pointing to, which is the metaphysics of writing as opposed to prediction. So this brings me to this distinction, which I actually had suggested first as a title of the talk, which is that the future, according to me and according to what I'm trying to show, must be written, not predicted. And this is because I really want here to put forth the contrast between the usual attitude that you might have towards the future, because a lot of people today are speaking of algorithms that are going to replace the future from us and to predict everything, because now you have such computational power that you may predict the needs of people who are lacking in searches on Google's, not to mention algorithms who are supposed in the field of finance to predict the market and trade the market. That's why we talk about algorithmic trading, because by far the market is the easiest, if you will, of fields where you can apply algorithms, because it's only down to numbers and it's only down to predicting whether the price of a stuff is going to go up or down. So that's why probability theory is very fashionable in the markets, and that's why people think that dominating the market or ruling the market or even saying what the market is all about, keeping in mind that I'm talking about the financial market, therefore it's only stuff that is written on the future, like futures, contracts, or derivatives that we're talking about. So this is what gave the impression that the market can be defined by algorithms, and you have people today who openly write announcements by saying, well, thanks to artificial intelligence, thanks to the power of storage of memory and the power of algorithms that we can let machines trade in place of individuals and trade forever. And because the machine is able to reprogram itself, so based on patterns of prices that it may observe, it reprograms itself to take further decisions. So that's one side of the argument that I want to dismiss. I want to argue against that, as opposed to what I would try to argue is the future must be written rather than predicted. And written, this relates to two things: to the derivatives market, as I said, because the derivative is a material piece of paper on which you write the payouts that it will have, and has to be traded by traders, by human beings who actually trade it materially on the floor. And the point that I will try to make today is that, and this is something that not a lot of people are familiar with, and even people in my field may have forgotten or not really thought about it very thoroughly and very carefully. And in this, really, the whole philosophy that I'm trying to write, and also the whole technology that my company is developed, is lodged right into that point, is that people are not really aware of the fact that when we talk about a market, so imagine the market of euro against dollar, say, so something, a price that is freely exchanged and that ticks all the time up and down, or the market of an equity index, like the S&P was traded in Chicago, or the Euro stocks, which is traded in Europe. They all have in mind that that asset whose price is going up and down, of course, randomly, is the only thing that they have to handle and care about, and they don't have in mind something which is much more massive and much richer, which is the number of derivatives that are written on that underlying. So key to the major distinction that I will have to make between what is purely prediction, purely algorithmic, purely reducible to probability trees and probability decision trees, the distinction between that and the dimension of writing, key to that is the fact that you should never think in the market of one underlying only, like the euro dollar, the exchange rate, or the equity index, or any stock or any commodity or anything that is trading. You should not only think about it in a single fashion, but always think, and I will show you a picture of that, of the massive number of derivatives, and I'll try to explain what they are, of derivatives that are written on it and instantly exchanged in open outcry or electronic exchanges simultaneously with that. So thanks to the sheer complexity of derivatives, you have this necessity to go beyond probability, beyond the single line following which something goes up and down, and consider no longer a timeline along which you anticipate the up movement or down movement of a single index or a single equity, but you have to expand your vision in space. So also key to my whole philosophy will be the distinction between time, chronological time, in which the algorithms of provision and prediction are lodged, and space, in which the full expansion of the instant prices of hundreds, sometimes thousands of derivatives that are instantly quoted on that underlying expand. So time against space. So I'll try to explain all that about derivatives in the end, but before that I will go back a little bit to something which may sound more familiar to you, which relates more to metaphysics and to books and to writing. So that would be the easy part, the first part. And because I mentioned, first of all, the future, therefore mentioned things that are unknown today and will only be unveiled or unfold in the future, so things that can be A, B, or C, or may not be at all. So that's basically what we call a contingent future, so meaning a future that we don't know by necessity. So therefore, metaphysically, the underlying notions that I'm referring to here are the categories of contingency and necessity, especially that are talking about writing the future. So that may hint to the idea that the future is known in advance, because I'm talking about writing it as if when you say history is written. So no, it's not that sense. I'm not saying writing the future as opposed to predicting it, meaning knowing the future in advance as a necessity. And in order to show these fine distinctions, I will have to talk a little bit about those notions that are metaphysical notions of what is known as contingency and necessity and possible worlds and possibility. So, when we say of something that is, and here this what I'm going to say here is very general. So for instance, Meillassoux, who is the philosopher who I mentioned, who has written this book, after finitude, the subtitle of his book, whose reading I absolutely recommend, because it's really completely readable by anyone who has, of course, no knowledge about derivatives, because Meillassoux has no knowledge about derivatives, but also for anyone who has no knowledge even of metaphysics, properly so-called, because he really drives the argument very neatly from first principles, if you will. The subtitle of his book is An Essay on the Necessity of Contingency. So you already see here that there's this play of notions which may sound contradictory at first, which as necessity and contingency, that he puts in play in a very extraordinary and original manner, and which actually helped me a lot in putting in framing my own reinterpretation and reaffirming of the notions. So what are contingency and necessity, metaphysically speaking? We say of something that it is contingent when that thing is not what it is by necessity. So therefore it could have been other than it is. It could have been red, black, yellow, etc., or it could have not existed at all. So even its existence may be contingent, as opposed to necessary, when a thing has to exist first of all, and has to have the shape and the body that it has. And this immediately hinges on a notion who maybe Leibniz was the first to really put in operation, which is the notion of possible worlds. So Leibniz is, as you know, a speculative philosopher or metaphysician, if you will, who was preoccupied, among other things, by showing that nothing happens contingently, nothing happens without a sufficient reason for it to happening. Even if we don't know that reason, God knows the reason. So this is the principle of sufficient reason, which hints about necessity. And also Leibniz was very much preoccupied by showing that the world that we live in is the best of all possible worlds. So that's why he invented the notion of possible world, which is a variation, a world which may look like ours, but may be different in some items. And in order to show that the world that we live in is the best of possible worlds, the whole argument was as if God, if you will, in all his wisdom, has first of all sampled a few variations of the world, and he has run a kind of optimizing algorithm, if you will, and ended up selecting, because God is infinitely knowledgeable and infinitely good, he has managed to, he has selected the best of all those possible worlds, which may not mean that the world is perfect. In any case, it is the best of the combination of all possible worlds that God was able to run in his algorithm. So that's why this notion of possible worlds has come into existence in the field of metaphysics. And it was later also borrowed by even physics and mathematics, because in physics, when we talk about physical systems with state variable running them, etc., we think of possible states that the system can be in, or even possible states of the world. And in probability theory and probability trees, as I will show you, we also talk about possible states or possible worlds, as opposed to the things that has happened. So that's very important that you have in mind this idea of changing a few items in the world and saying that's another alternative, and see what happens there in order to optimize the decision that I make in that world, in the present world. This kind of schema of thought, which is called the probability tree or probability decision tree, is again key in any kind of algorithmic predictive algorithm, any kind of predictive algorithm logic. Okay. This is the cover of the last book I wrote, which is The Medium of Contingency. I meant to show it to you because to show you that the idea of contingency is the key term. It's a little bit more specialized than the blank swan, in the sense that I no longer indulge in the French philosophy, no longer talk about Deleuze, Meillassoux, or Badiou, but focus more on the proper subject of contingency, therefore on derivatives, but also in general on probability. So for those of you who are interested in the philosophy of probability and how it has to be exceeded by processes which I call writing processes, an instance of which is the derivative market, can have a look at that book. So here, I mean, I'll show you basically the two cases that I will try to investigate as best as I can today in order, again, to point to the difference that is important between prediction and writing. So there is the case of the market of contingent claims, or the case of the market of derivatives, and the case of Pierre Ménard. I don't know if you're all familiar with it, so let me discuss a little bit Pierre Ménard first. So Pierre Ménard is a very interesting character. He's actually a fictional character who was invented by the Argentinian writer Borges, Georges-Louis Borges. So the story of Pierre Ménard is a few pages you can find it in, I think, Borges' collected works, which are called fictions. And so Pierre Ménard has died, and a friend of his is, the narrator is a friend of Pierre Ménard who is telling the reader the story of Pierre Ménard. And he tells us that Pierre Ménard is a French writer who was living in the south of France in the early 20th century, so around the 1920s, who was not a very well-known writer. So he's an obscure writer who may have published during his life an essay on verse and poetry, or maybe have published himself a few poems. But now that he has died and his friend is able to speak in his name, and through correspondence that friend has had with Pierre Ménard, the friend, the narrator, is able to disclose to us what, according to him, was by far the most important work, unpublished, but known to him, to the friend, of Pierre Ménard. And even Borges, at some point, himself comments on the commentator by saying probably this work is the most important work of the 20th century. And what is this work? It is actually writing of 2 chapters of Cervantes' Don Quixote. And from correspondence with the narrator, we know that it took Pierre Ménard 20 years, the last 20 years of his life, to do so. So he has not rewritten the Quixote, he has not copied the Quixote. He has spent 20 years, which is a substantial amount of time, writing word by word 2 chapters of the Don Quixote. Of course, this sounds completely fantastic, and actually it's a fantastic story, but if you read the story by Borges, you tend to believe that such a thing can happen, and that it could be credible that somebody should dedicate all this time writing word by word 2 chapters of the Don Quixote. And as you'll see, what interests me in the end, I will develop the story a little bit later, is that if we want to make sense of Borges' story and understand how Pierre Ménard was able not to copy the Quixote, but actually to spend all this time writing it, we have to change the metaphysics of time itself, and according to me, to no longer look at what Pierre Ménard has done through the eye of probability and prediction, because if you open the eye of an algorithm or probability tree, it will appear in that eye that the Quixote already exists, because Cervantes has already written it. So you have no choice in that schema of thought than to say that Pierre Ménard has copied it. Whereas in the alternative schema of thought, which I want to show you is blind to possibility, and even something that you should take away from possibility and explore another dimension, which I call a dark dimension, or dimension of matter, as opposed to the dimension of light and the dimension of prevision. In that medium, which I call the medium of contingency, for instance, in my book, in that medium, you can understand what Pierre Ménard has really achieved, and in that medium, you can understand also how the market of contingent claims, that's why the two are linked, is a superior technology to prevision and to algorithm. So let me. All of this will become clear later when I will talk about probability prevision by showing you diagrams. But let me a little bit continue talking to you about why this distinction is important. So to go back a little bit to something that I said earlier about the market and time. So the market, in the sense of a financial market, as I said, everyone thinks that it is linked with time. because the financial market, to whom among you who are not familiar with it, is basically composed, if you will, of two basic assets or components that trade freely: stocks of companies that are made public and that whose shares you can trade, and bonds. So if you own a stock in a company, basically you buy that stock, say, on the stock exchange, you become a shareholder of the company, but more importantly, you become entitled to dividends that the stock can pay out in the meantime, and you become entitled to selling the stock later should its price rise. Therefore, you're interested in the capital gains of that company. Keeping in mind, of course, and I'm especially, keeping it financial, keeping in mind that there might be deep reasons because you're interested in the product of the company, of course, that you want to become a shareholder of the company. And the other major financial asset is a bond, where a company or a government borrows from you money, from the investor money. Therefore, you, the investor, who gave away your money to that entity, which is a government or a company, you become a holder of what we call a bond, which is also a piece of paper that has a maturity written on it. So at some point, the bonds are going to be redeemed, and the entity who borrowed from you the money is going to pay you the money back. So at the redemption of the bond, the principal or the money that you lend is going to change hands again and come back to you. And in the meantime, you earn interests. So, you earn coupons. Bond, by the way, was the first historically financial instrument ever invented by man, because people, as soon as money was invented, if you will, because people think that even money is a bond in a way, because it's something that you lend to the state who is printing the money in exchange. So if you will, a bond is really the first entity ever that appears as soon as we are talking about finance. And it was very quickly succeeded by stock. And there is a very interesting book that I read and was very key in my writing of The Blank Swan, which is a book by Niall Ferguson, which is called The Ascent of Money, a history of the financial world, where he describes in history and also genetically speaking how key to the emergence of stock exchange and to the financial markets as we know them today, a key element to that happened in 1602 when the Dutch Company of East India was created. So it's the Dutch people who invented really stocks and the stock exchange, because first of all, before them, if you will, to be simple, before them the only kind of financial transaction that you had was lending money and getting your money back with interest, with the risk that you go bankrupt and you are not able to pay back the money that you've borrowed from somebody, and this is catastrophic. Because if you've read The Merchant of Venice, you know that it has very dire consequences. Basically, the creditor can cut a lump of your body in payment of the debt that you'll become unable to pay. So credit is very bad in the ethical sense, if you will, because of the fact that somebody who owns on you, who's your creditor, ultimately is entitled to bankrupt you and take away everything from you if you are unable to pay him back the money. So that's why we have a debt crisis. So that was a prehistory, if you will, of finance, until the Dutch came in 1602 with a very clever idea, which is to say, instead of lending money to the captain of a ship who's going to go to East India to found the new counters and to buy stuff, etc., and take the risk that, first of all, the ship thinks and the debitor is not able to pay me back my money, they've created a joint stock company where all the shareholders put their money in common, so you no longer had any idea to what ship in particular the money was going to be channeled, and everyone was a bearer of the same risk at once. So that meant that this company now existed, the Company of East India. The company itself financed the ships, and all you had was stock you owned in that company, and if the company went bankrupt, that's it. You don't get your money, because everyone participated in the same risk. So that simple fact, where you no longer have a title to claim back your money, but take fully the risk with the other guy. So the other guy may have the idea, the other guy may be the captain, the other guy may be creating the company, the startup company or whatnot. So he has the clever idea, and you are only bringing in the money, yet you become both equally shareholders So he may be bringing the idea and he will get 50% of the capital, and you may be bringing in the money and you get 50%. But as soon as that happens, you become sharing the same fate. So you both go bankrupt together, or you make millions together. So it's not that he doesn't pay the money. And of course, the upside of it is that you may make millions together. So it's not that if his company is doing well, he will pay you $100 that you've lent, and that's it. You become rich with it. So that invention, which happened historically in 1602, is what immediately opened the possibility of that stock, which you own anonymously, if you will, because there are several shareholders, became exchanged in the street. So as soon as we moved from this one-to-one relation between a debtor and a creditor to a situation where we have a group of people investing in the same company, it immediately created the idea that that stock should be exchanged in the street. So the stock exchange was, according to my reading, simultaneously engendered, if you will, with that major shift from bond to stock. So stuff started becoming exchanged freely, and this is how the stock exchange was born. So it was exchanged in the street, and later they put a ceiling because it was raining sometimes. And this is how the stock exchanges was born. And of course, to cut a long story short, because the stuff is exchanged freely, it means that it has no value, and this will shock a lot of people, except its price. So its price can go up, go down. Nothing tells you what the price should be, so there is no valuation that somebody is producing beforehand in order to tell you what the price is. This may lead, of course, to speculative bubbles, meaning price goes up and you start buying because you know that it will go up and you want to make money. This also leads to Keynes' beauty contest, meaning it doesn't matter ultimately whether the company is worth something fundamentally. The only reason why I'm buying it is because other people think it's a good company. So, meaning, what is the vote for not the most beautiful woman, but vote for the woman that a lot of other people than you would think is the most beautiful woman. That's the Keynes beauty contest. So it's dangerous in a way, because you think that there is no ground anymore to support value. There is only the movement of price which is driving price up or down. And this to me is fundamental. I believe that there is no value except price. So price is the only thing. And by the sheer fact, of course you can argue forever, so that's something you may not agree with me, but keep in mind that as soon as the stock exchange was created, price evolution became random. That's the major thing I'm driving at. So because nobody is telling me that's what the price should be worth, but the price is only down to free exchange, it has to become random and it has to go up and down. And this randomness of price is what, again, brings up the whole quantitative technology and industry that I'm in, which is trying to statistically study price series, statistically try to train a trader or train later an algorithm in order to guess before your opponent what is the next movement of prices going to be in order to buy in advance and make money. And this by itself created the whole industry of derivatives. So derivatives is a second generation of instrument that came after the first two, which is stock and bonds. Derivatives is typically a virtual instrument, if you will, something that doesn't, as the critics of derivatives say, doesn't relate immediately to the real economy, in the sense that it's not, the stock relates to the real economy because it's the stock of the company, the bond relates to the real economy because it's a bond issued by a government or by an entity, but derivatives are pieces of paper who are completely creative, so you can write any kind of derivative, that are written on a basic asset. For instance, the simplest in the textbook kind of derivative is call options and put options, as we call them. So as soon as you understand that by a kind of implacable logic here, I'm saying that stuff that is traded down there is going to be random. As soon as you have that, you have people who, this opens up the dimension of the future, because random meaning in the future I don't know what it's going to be worth. And this immediately opens up the necessity for people to guarantee for themselves, to insure themselves against the future evolution of prices. So if you're not sure that you want to buy a stock today, or even a house today, or buy real estate today, or whatnot, because you don't have the money today, you will have it later, or maybe you want to only invest later, but you want to guarantee for yourself a price at which later in the future you can buy the stock or buy the house, this is when You ask someone to sell you this insurance, so to sell you the right to buy the stock at a predetermined price in the future. That's a call option. So as soon as somebody is able to produce for you a contract, so therefore there's a contract binding that crazy person who is going to sell you that right and you, and the contract stipulates that during a certain amount of time, meaning 1 year, 6 months, 3 months, 1 week, 1 day perhaps sometimes, you have the right during that guaranteed period of time to buy that thing whose price is fluctuating randomly at a predetermined price, and the price is set up in the contract. So that's a call option. The right to buy at a predetermined price something whose price in the future is random, is uncertain, unknown. And conversely, if you already own a house, already own a portfolio of stock or whatnot, and you want to guarantee that the value is preserved, and because the randomness of prices on the stock exchange there might be a crash or something, you have people who sell you the right to sell whatever thing you own at a predetermined price. In that way, they guarantee that should the price of that stuff in the future end up lower, you exercise the right to sell it at a higher price. So these are the simplest derivatives. And they are endless, therefore this by itself opens this what I'm talking about. When the market now is defined no longer only as the time dimension of the underlying which is moving up or down, but keeping in mind now this new space of writing that you've opened where you can write derivatives written on that stock, this becomes, when the market is defined as the endless writing chain of contingent claim, time, according to me, and prediction drop out of the equation because we enter into the dimension of space. Why? Because think again of the call option. There are already two variables that are key in defining it, which is the time frame in which you have the right to exercise it, and the predetermined price at which you agree that you're going to buy your house. So this in itself means that on one underlying asset, you can write virtually an infinite number of options, each guaranteeing a different predetermined price, and an infinity in the other dimension, which is time, each option with a different lifespan. So you see how very complex and how immediately you span something which is infinitely richer than the first time dimension of the movement of the underlying stock. Not to mention that once those derivatives become traded, and for some period of time after the crash in 1929, those derivatives became very unfashionable because people used them in the 1929 crash to speculate by buying puts against the stocks, so they were banned, officially so, and they came back into fashion because people were speculating. You can buy puts for 1 cent or 2 cents and make millions if the stocks went down. So that was considered by people that even if you have no interest in that company, you were like gambling on its bad fate, etc. So they were banned after the 1929 crash. And they came back into fashion in the 70s when two crucial things happened, 1973 to be exact. First of all, there was three mathematicians in Chicago who showed what is known as the Black and Scholes and Merton, because there are 3 people, equation. So they showed something which became a key element in the whole industry of derivatives. So they were able to actually produce a formula that gave anyone who had the power of computing things off a calculator what the value of options should be. As I mentioned, that somebody was going to sell you that right to buy or sell at a determined price, so therefore that right itself has a value, because it's an insurance, if you will. So the value of that right, sometimes it's also called the premium of the option, is something that requires a little bit of math, because if you think about it intuitively, you need to sample the scenarios that may happen to that underlying equity that you are insuring, and therefore it requires math. And in 1973, those 3 guys were able to produce an exact formula to price options. The first who has attempted to price them was Louis Bachelier in 1900. So he priced options in Paris Bourse, and he actually wrote a thesis on that. So when Black and Scholes showed their argument, it no longer looked as if options were mere gambling on the future, because they became mathematical in a way, And this then lifted the ban, more or less, on options and allowed Chicago Board of Exchange at that time to make options fashionable again, and they became traded in 1973 on Chicago. So options started becoming very liquid then, simultaneously because they were no longer banned and because all the market makers, of whom I was one, were now able to have calculators to compute option prices, and this was the explosion, in the good sense of the term, of the derivatives industry and the derivatives exchanges. And today they tell you that the amounts that are exchanged on derivatives by far exceed the real economy, if you will, of the stocks and underlying. So this happened starting from 1973. In 87, there was a major crash, which I witnessed because I was on the floor that day, which more or less was caused by people running the algorithms and the Black-Scholes formula to price derivatives. But contrary to what we expected, the crash only contributed to make options even more popular than before. The crash was critical, so happening 14 years after Black-Scholes in 87, was critical in releasing the options to their trading fate and no longer being just the products of an algorithm or a formula. So that to me was very important in saying that options became, if you will, almost basic assets in themselves after the 87 crash. It's a very important thing. So that's why, because options became so liquid and trading in such huge amounts, especially after the 87 crash, they became themselves almost basic assets on which you might now write options. So that opens the other dimension, which is critical. Not only you have options with different maturities and different strike prices, which is the predetermined price at which you bought or sold things, but now you could write options on the options, so that opens layers in the complexity. And this is happening today in Chicago, for instance. You not only have options written on the S&P, but you have also VIX, the volatility index. You may not be familiar with it, and options written on VIX. So when the market is defined as this endless writing chain of contingent claims, it opens up to the direction of space, because all of this is instantaneous. I'm no longer looking at the time dimension. And the direction of space is the one in which I lodge writing, because writing, you can only write on a page, so writing occupies space, it occupies matter, as opposed to time. And because in my talk I'm making this parallel between Pierre Ménard and the financial market, between writing and prediction and the market, so to me writing or the market, because it happens in space, is more similar to a book rather to a prediction algorithm. So there is also, I found, when I started investigating, if you will, the new metaphysics, that according to me, the sheer number of derivatives forced upon me to go outside the probability schema of thought and outside provisions. So it's I who coined the term writing for that. I was surprised to see that exactly the same kind of metaphysical distinction between the dimension of time and prediction and the dimension of writing was already made, for instance, by Mallarmé, or at least by Maurice Blanchot's interpretation of Mallarmé's throw of a dice, not to mention Pierre Ménard, who I myself interpret as being lodged in the writing dimension as opposed to the prediction dimension. So for instance, at some point before writing the Blank Swan, I came upon the book written by Maurice Blanchot, who you may be familiar with, who's a French critic of the 20th century. And Blanchot has written an important book in the literary criticism, which is called The Book to Come. And one chapter of that book is also called The Book to Come, and that chapter is dedicated to an interpretation of Mallarmé's A Throw of the Dice by Blanchot. So A Throw of Dice is a poem that Mallarmé, the French poet, has written in 1898, I believe, toward the end of his life, which is a very strange poem, and according to many critics, a very important poem. By the way, Meillassoux has written his second book, Meillassoux, the philosopher of contingency. The second book he's published is a book which may sound as if it has nothing to do with metaphysics, but only with literary criticism, is a book in which he analyzes and deciphers Mallarmé's poem. So the poem of Mallarmé is very weird because it happened at a time where Mallarmé was more or less, I'm being schematic here, sick with the regular verse, if you will. So he wanted to innovate and to write something in the irregular verse, especially, but now that you are trying to go outside, if you will, necessity and outside the regular verse, you wonder what kind of irregular verse shall I write? So that opens up the question of randomness. And that's why in Mallarmé's poem, there's the figure of the poet who is throwing a dice. So according to the interpretation, so he is trying by a throw of the die to determine what the metric is going to be of his irregular verse. However, Mallarmé wanted, as a key element in his own composition, not to exhaust chance once and for all by producing one poem which has one metric and one only irregular verse. He wanted chance to be always potentially present, and that's why the key proposition in the poem is a throw of the dice will never abolish chance. Right? And the way he managed to convey this idea, according to Blanchot and according also to Meyassous's interpretation, to manage the idea that it's not that we threw the dice once and for all and the poem was set and the meter of the poem was set, but we want, as we produce the poem, have the throw of the dice remain thrown forever, and itself somebody throwing the dice forever. He wrote a poem in a very unusual layout. The verse is not linear. The words are interspersed all over the page, and the blanks that are between words are almost as important as the words themselves. So therefore, the poem is predicated more on the spatial kind of configuration rather than on a linear reading. And this is why Blanchot is saying here that Mallarmé's A Throw of the Dice, that poem, is the book to come. Space on which those words are laid out excludes ordinary time in the sense of prediction. In this space, the space of the poem, instant never follows instant according to the linear progression of an irreversible future. So it gives you the idea that it's not a throw once and for all that sets up the meter, but because of the words being spread out on the page. And to me, as I will show you pictures later, that relates to the idea that, in the market of derivatives, if you will, that we are not only focusing on one linear dimension of time, which is how the underlying equity or underlying currency is going to move, but we at once have the full richness of the derivative in space. That points to the fact that chance is never abolished, and probability and provision and algorithm will never actually exhaust chance, and you have to resort to something else. So this brings me to what I've already said. The market, which enhanced by the richness of derivatives, has the nature of a book rather than the nature of a time algorithm, if you will. Hence the nature of space and not of time. The market writes the future and doesn't predict the future as in algorithmic trading or provision. The market is as massively unpredictable as the future. So what do I mean by that? Let's go back a little bit to a criticism that you can hear today about, as I said, algorithmic trading and about derivatives by people who think that derivatives market are the same as algorithmic trading, because people think that derivatives is the realm of the quantitative, therefore the future is completely quantified by the stock exchange, therefore derivatives have completely predicted the market. People tell you, I've heard people tell you, that this quantitative aspect of finance, which is either represented by derivatives market or represented by algorithmic trading, robs us of the future, because it has replaced the future, and everything that we have in our future has now, according to this bad interpretation in my sense, to go through the channel of quantity and price and number. Therefore, the market has replaced the future, and therefore depriving us of a future in the totally open, revolutionary, if you will, sense of the word. I go against that by saying, no, I agree with you that the future, in the sense of the completely unprecedented, the future in the sense of the completely unpredictable, the future in the sense that no one can predict it, because no algorithm can beforehand tell you what future's word can look like. This is what I call massively unpredictable. My whole philosophy of derivatives pricing is to say that the market of derivatives is not less than that, it is equal to that. It is as massively unpredictable and as massively eventful as the future. Therefore, It's more of a technology of your future than a replacement. So that's important. In my argument, trying to show that if you believe, like me, like all those philosophers of the event, that the future, in the sense that is made up of events which are unprecedented, the future is not down to just saying what is going to be the result of some election somewhere in some country, because maybe the future will make it so that the whole country, I don't know, enters into war, and that there is no longer even the context in which you are speaking of somebody getting elected or not. The whole world can change in ways that were not mapped out beforehand by the scenarios that you've distinguished. That's the main thing. This is what a real event is one, things that were unthought previously happen, therefore happen outside, if you will, the scenarios that you have mapped out, therefore outside any schema of thought that relies on algorithm and on decision trees and on scenarios. So that's massively unpredictable. That is the event. And my whole point is to say that, well, thanks to that dimension, which is by far richer and more dense than just the prediction of the algorithm and just the timeline, which is derivatives, we have on our hands something which is the financial market, which is as massively unpredictable as the future. And when I say that, I think of the future as something very real and very concrete. Ultimately, when I will show you next how probability theory works, probability and algorithms, and anyone who is trying to think algorithmically or probabilistically has to abstract from the real world. You have to decide what in the real world interests you in terms of scenarios, and you abstract them from anything else. Therefore, the concrete world, if you will, is very untractable. But as soon as you want to make prediction, you have to select arbitrarily, maybe, scenarios that you deem interesting, to which you accord probabilities. If you are playing dice, it doesn't matter what's temperature of the room you are playing in and what's the gravity of the Earth is like. All you're interested in is the faces of the dice that you are throwing. So you abstract from the concrete situation that you are engaged with the player and reduce your word to only 6 faces, and you apply probability to that. That's prediction. However, we should never forget that the absolute and infinite concreteness of the world is underlying all this. Because, as I said, maybe if you are playing dice, a meteorite can land on you and kill both players. So that's something which is very concrete, right? Could happen. Or maybe gravity will disappear and you throw the dice and it never falls back on Earth, right? Or maybe somebody like Mallarmé comes and writes a poem where you throw the dice and it never lands. He throws the dice not once and for all, but once for all times, meaning it never lands. So things can happen in the makeup of thought that wasn't part of that abstraction. How am I doing in time? I have can talk for half an hour maybe. Yes. Okay. Do you have questions at this? Okay. So now that we have, I have a lot anticipated on things that I will show you later. So we'll try to make up for time later. So now let's diverge a little bit from the market. You may not like the market after all, and talk a little bit about the other thing, which is books and writings. And as I said, I'm trying to make a parallel between the market and the book. Even I said that the market has the nature of the book. So let me now apply the metaphysical categories that I alluded to, which are contingency, necessity, and possibility, to the book a little bit, and guide you through a sequence of thinking which will only deal with books. So I hope this will be more sympathetic to you than the market, and I will get back to the market at the end. So let's at first study 3 categories of books, following the distinction that I made between contingency, necessity, and possibility. So I will review 3 kinds of book: contingent book, a necessary book, and an impossible book, keeping in mind that contingent book is a book that may be different than it is and may have not existed, by the way. A necessary book is a book that has to exist and cannot not exist. And the impossible book is a book that cannot exist. So in no instance of the world such a book can exist. The first case of a contingent book is actually the Don Quixote itself by Cervantes. And the reason I say so is that
Pierre Ménard says so, actually, in the story of Pierre Ménard. So Pierre Ménard, as quoted by the friend who is narrating the story from correspondence with Pierre Ménard, has said the following. He said, "The Quixote by Cervantes deeply interests me, but doesn't seem to me inevitable. I know myself able to imagine the world without the Quixote. Therefore, the Quixote is a contingent book. It may have not existed. The Quixote is not necessary. I can therefore write it without falling into tautology." You see here at play the notions that I have said, because Ménard, this weird character who wants to write, not rewrite the Quixote, if he were talking about a necessary book, there wouldn't be any value, if you will, in writing it, but because the book would write itself by itself, it's necessary. So he needs to start out with a contingent book for it to not be tautological to write such a book. Okay? But then I argue that because of that choice of Pierre Ménard, whereby he picks not a random book, because the Don Quixote is a very known book, known to everyone, so it's a universal book, everybody knows it, so you could maybe think that it has become necessary in that sense, that everyone recognizes what it is. So I won't call it a random book, it's not an obscure book, but it's a contingent book, because it could have not existed. So what happens next is that by the sheer fact that Pierre Ménard has picked that book as opposed to anyone else, and he wants to converge back to it and to write it, it means it became necessary in the attempt of Pierre Ménard. And even to a point where he continues in his correspondence saying to the narrator that he did not want Pierre Ménard to compose another Quixote, because you may think that what he wanted to produce was a remake of the Quixote with new concepts, which are 20th century concepts, and even with French language, because he's a French writer, Pierre Ménard. No, he wanted to compose the Quixote, and he went on to study Spanish in order to write it. So he said, typically, I had no intention of copying it. I wanted to come to the Quixote through the experiences of Pierre Ménard myself. That's by far the most, if you will, impossible task that Pierre Ménard has assigned to himself. He did not want to. He tried at first, then he says that he thought that wasn't interesting. He tried at first to put himself precisely in the shoes of Don Quixote, and precisely to act like him, to relive, if you will, the life of Cervantes, in order to produce the Quixote. But he said, of course, that's impossible to do in a finite lifetime, but it's not impossible enough. I want to be to greater challenge. I want to write the Quixote coming from the experiences of Pierre Ménard, of myself. So that's why, still continuing with the interplay between necessity and contingency, you see here that there's another layer that is being built up, because now we are saying Pierre Ménard is just anybody. He's an obscure writer, so he's completely contingent. So what happens to Pierre Ménard in his own life is perfectly contingent. Yet it's true that contingent existence and life that Pierre Ménard wanted to circle back, or I don't want to say back because it's as if there was an original and a copy. He wants us to write the Quixote, therefore it makes it even more necessary looking than before, now that the Quixote as written by Pierre Ménard. So I'm saying here that the Quixote by Pierre Ménard becomes a necessary book, if you will, in a weird sense of necessity, which is not necessity in the Leibnizian sense of something being just a replica of itself in all possible words. That would be the necessity if Pierre Ménard had copied the Quixote. He didn't want to copy it. So we are talking here about a new brand of necessity which is subtracted from possibility rather than being a summation of possibilities. I wanted to make you sensitive to this kind of new dimension. And as I said, Borges says at some point that the work of Pierre Ménard now, not of Cervantes, is perhaps the most significant of our time. So it becomes even more universal and more necessary than Cervantes' work itself. I can even drive the argument further by saying, actually, Pierre Ménard is an original writer, not a reader, because you have people in the literary criticism like Gérard Genet who has simply interpreted what Borges wanted to tell us through his story about Pierre Ménard as Pierre Ménard being a metaphor of a reader. Any reader who is reading any book kind of relives the book through the own life and concepts of the reader and through the own interpretations of the reader. Therefore, if Pierre Ménard wanted to write the Quichotte through being Pierre Ménard, one could read that as being a materialization or a metaphor of what any reader who's reading any book is himself doing in his mind. I reject that. I say no. And I argue why this is so actually in that chapter that Amy has written, not rewritten. I think, on the contrary, he is an original writer and a more original writer than Cervantes himself, because Cervantes wrote something that turned out to be the Quichotte, whereas Pierre Ménard wrote the Quichotte. So it's more original writer of the Quichotte than Cervantes himself. And as you may know, Pierre Ménard, actually, there was a fellowship of Pierre Ménard. Hélène Sturtevant also produced a writing of 2 chapters of the Don Quixote herself. Not sure if there are the 2 same chapters as Pierre Ménard, which are chapters 9 and 39. So I argued here that the Quichotte by Pierre Ménard became kind of necessary in another sense of necessity than you would expect from the logic of Leibniz. However, later in his life, towards the end of his life, because apparently he was facing such an impossible task, Ménard himself confided finally to his friend that maybe after all this task is impossible. So he kind of turns his mind here by saying, maybe after all, acting as Cervantes was impossible, but not impossible enough, but acting as Pierre Ménard wanting to write the Quichotte is more impossible, but maybe it's really impossible because I don't have like an infinite amount of time ahead of me. Maybe after all it was necessary that the Don Quixote be written in Cervantes' days 300 years earlier than now, and he kind of, at the end, he loses hope and he says that what I'm doing is impossible. And this brings me here again by playing on the duality between impossibility and necessity to an aside a little bit. Actually, before writing the Blank Swan, which is, as I said, the book I wrote on derivatives and not just on derivatives, I wrote a book in French at the time that I was studying philosophy at La Sorbonne, so a book that had nothing to do with finance and derivatives. And in that book that I first became attracted to Pierre Ménard, among other things. And so it was philosophy that I was doing then, and it's a book that actually is about the philosophy of writing and reading. So it is from that book and that period in time that I wrote all the ideas that I later developed about why writing is different than reading, which brings me to maybe a little remark about philosophy itself. Philosophy, as for instance Deleuze talks about it, is impossible. So philosophy, the task of philosophy is that you think things that you couldn't think before. So philosophy the business of philosophy is the unthought, something that you didn't think about earlier. However, philosophy is not just a fantasy. It's not that you can think of anything whatsoever. The main task of philosophy is once it has invented those concepts. So Deleuze describes the philosopher as somebody who invents concepts. And he describes the advent of thinking as an event in the proper sense of the term of the unprecedented. But the task of philosophy doesn't stop in having things that you could not think before. It has to turn those things or those thoughts into necessary thoughts. So philosophy has to discover new laws of thinking. So how can you discover a law of thinking if the thing wasn't unthought previously, that then becomes a necessary of thought? In philosophy too, if you think about it a little bit, and that's why to me philosophy books are very important. So philosophy cannot be learned in an algorithm, or they cannot plug into you as they do in the Matrix a memory of philosophy, like teach me how to drive a helicopter, and they just implant the chip. I don't think that you can download or upload a philosophy book in the minds of somebody like that. You really have to go through the right reading of the book, and I even would add almost as slowly as it was written by the author itself in order to get that. For instance, Meillassoux himself, even though the philosopher Meillassoux, who showed in his book that the only necessary thing that there is out there is contingency. Meillassoux was interpreted, I think, wrongly by people by saying that he has established that therefore anything goes, and even he says that the laws of nature can, go berserk the next day, that anything whatsoever can happen. No, it's not what Meillassoux wants to establish. Meillassoux established the thought of contingency as being the thing that thought has to think necessarily. So he told me in private communication that what he wanted, he was pursuing, was philosophy in the most, if you will, respectable of senses, meaning I want to produce things that thought has to think of necessity. So philosophy is after things that thought has to think necessarily, even if it turns out that the only thing that thought can think of necessity is contingency. Okay, so keep in mind there's always this interplay between necessity and contingency here. Which brings me to the third case of a book that I want to discuss, which actually the book that preoccupied me, apart from Blanchot and Pierre Ménard, this is a book that preoccupied me in my previous years where I was doing philosophy and not just finance, which is Wittgenstein's Tractatus Logico-Philosophicus, which I call impossible book, and you'll see why. You think of it as impossible, you can think of it as impossible in terms of difficult. And by the way, Alberto Costa, who is one of the, according to me, one of the most eminent commentator of Wittgenstein, in his book, The Semantic Tradition, Koffa died in 87, but he wrote what I think is the book that really brings the hinge between analytical philosophy, of which Wittgenstein is known to be the founder, more or less, Wittgenstein and Russell. So the hinge between analytical philosophy and continental philosophy, because he interprets Wittgenstein in Kantian terms. So Koffa, his book, was also very important in my own philosophical upbringing. So he says of the Tractatus that it may well be the most difficult philosophical book written in the 20th century. So you may think that this is one of the reasons why it's impossible. Wittgenstein himself, in the preface of the Tractatus, writes the following. He says, "Perhaps this book will be understood only by someone who has himself already had the thoughts that are expressed in it, or at least similar thoughts." So this speaks of the difficulty. It's such a difficult book that you need to have the thoughts in advance that are presented in order to understand it. So it's not a textbook in the sense that he will like drive you from one proposition to the next as if you were in school. Its purpose would be achieved if it gave pleasure to one person who read and understood it. So this is very enigmatic, and it's even an impossible statement, because it's as if he's saying that only he who understands the Tractatus is somebody who's already had the thoughts. So the first reader will not understand it, but the second reader, reading it the second time maybe, you can understand, because if you've read it one time, you may already have the thoughts that are in it. Okay? So you see here how also we are playing on an unusual play between necessity, possibility, and etc. And even better, you can say that the only person who can understand the Tractatus is the writer of the Tractatus, because obviously he's already had the thoughts that are in it. So that actually, I first started writing my first book on the Tractatus, and this is what drove me to Pierre Ménard, because when I made up the thought that actually maybe Wittgenstein is saying that only if you wrote the Tractatus could you understand it, that I thought back of Pierre Ménard, who I had read when I was a teenager, of somebody who was writing an existing text, and I ended up arguing that this is the right way to understand the Tractatus, is to write it. Seriously. Okay. And to give you an idea, for those among you who are not familiar with it, about why the Tractatus is known to be difficult, because it presents itself like an algorithm in a kind of way. So it's supposed in it, Wittgenstein, it's a short book, 70 pages, and in it Wittgenstein was very ambitious. He says also in the preface that he has managed to write in it some definitive truth in philosophy. So the task that he has set himself to achieve in that book was, in those days, to purify and liberate, to solve all philosophical problems, according to him. So he wanted really to show that all the philosophical problems and issues that were still remaining in those days, 1918 or so, were actually down to a misinterpretation of language. And only if we couched the word in a very logical and rigorous and almost formalistic language, will the problems that we think are the problems of philosophy disappear by themselves. So they will dissolve. So the Tractatus, the purpose was not to solve the philosophical problems, but to dissolve them. So this is what gave analytical philosophy what we call also the linguistic turn, by saying, well, all the things that may sound as if they are posing problems, metaphysical problems basically, because science and physics, everybody knows what it is, even though we don't know why there is something as the law of gravity and why it is. We don't know the metaphysics, but at least the physics we know. So Wittgenstein, who was working through that, if you will, school of thought of logic, wanted to also show that all the things that inspire philosophy to write bad philosophy, and everyone after Wittgenstein interpreted them as saying that continental philosophy, so people writing like Heidegger in those days, were actually writing bad philosophy because there was mistaking metaphysical problems for things that shouldn't exist, that Wittgenstein wanted to dissolve for you just by putting the language right. So, to put it in modern terms, if you formalize the language, these were before the days of artificial intelligence and computer programs and formalistic language. In those days, people were, on the other hand, trying to formalize mathematics like Tarski, etc., and formalize logic and Carnap, etc. So the whole idea, the whole hope here was that by formalizing language, could you purify it and make the things that seemed unclear disappear? And he actually, Wittgenstein, set out to actually produce that task and to, in the Tractatus, give you the logical structure of the world, once and for all, completely purified from metaphysics and from bad philosophy, and formalized for you. So that's why he set out to write the Tractatus in an algorithmic way, if you will. So the Tractatus is composed of instructions almost, which are numbered, and propositions that ramify in other propositions. So just to give you the flavor, the first four propositions are the following. The world is all that is the case. The world is the totality of facts, not of things. So trying to reduce down the world to its basic constituents, it's not composed of things, because a thing like a table is not atomic enough. What is more atomic is a table falls down, a door opens, so these are facts. So if you compose together all the facts that may happen to an object like a door, it opens, it burns, etc., only then can you abstract and give the idea of what the thing is, according to Wittgenstein. So breaking down to the atoms is actually facts, not things. Things are abstractions. States of things, again, remember what I told you about probability. The concrete world is anything can happen, and you cannot describe whether, if I'm playing with dice, the situation is not going to unfold into one where gravity is going to stop or the meteorite is going to fall, etc. However, to abstract from it and have a states of the world stable, I need to abstract from the facts. So the world is the totality of facts, not of things. The facts in logical space are the world. So keep in mind here the word logical space, because I will show you how this maps out. What is the case? A fact is the existence of state of affairs. The state of affairs is the possible facts that may happen. Okay. So by setting out to do this, from the start, Wittgenstein is very ambitious. So he wants to reduce the whole world into this collection of state of affairs or facts, etc. And Elie Friedlander, who is another commentator of Wittgenstein, says, a book of this sort presents us with the world as the sum total of facts, letting us survey or contemplate all that is the case extensively or exhaustively. Enumeration of the facts constitute the essence of such a book. So this is why Wittgenstein has been known to be the founder of what we call in philosophy logical atomism. So trying to reduce the world down to atomic facts, to logic atomic facts. And it's also important in the logic of the trees and the probability that I mentioned earlier, where the whole thing is mapped out with nothing remaining that you didn't map out, and anything that you didn't map out is nonsense, right, according to him. So here Friedlander says that you have two things. You have to be exhaustive, meaning enumerate all the facts of the world, and extensive, meaning you have to distinguish between the facts. So basically you have to enumerate things. So enumeration constitutes the essence of such a book. And as I said, this has spawned those strands in philosophical thinking, logical atomism, extensional logic, which is also a link to set theory, where in set theory the elements of the set are described extensionally, and analytical philosophy, which is a philosophy that sets out to be very rigorous and not to indulge into bad metaphysics and only analyze things rigorously, as opposed to continental philosophy. And this brings me to that picture, which will be the first possible link to the market later. So according to Wittgenstein, to put it simply, this is how the logical space or the logical map of the world would look like. So we start out at time 0 in the world that we are in, which I call W00, meaning time 0 and the spot 0. And because of the sheer variety of facts, of state of affairs that are open before the world can branch out in many possible scenarios, one of which will be actualized as time flows back. So all of this to show you that we are actually describing here the logic of what we call a decision tree, where the world or the states of the world evolve from one time step to the next through a pre-selection of states. And let's not forget that Wittgenstein's idea is to be exhaustive. So according to his philosophy, he's exhausted all the cases of all the world here. So there are nothing left out, if you will. And this gives us a picture of how the logic, I mean, it may not be in time, it may be also in a sequence of reasoning that you are thinking of the world in steps like that. And this, by the way, is the schema of thought that is the basis, as I said, of algorithms. So any algorithm is following a tree like that, where in any case, the algorithm, depending on what happened, will find itself, if the stock goes up, the algorithm will find itself in the next period at the new price, and from there the algorithm is going to project what the new scenarios are going to be according to its prediction algorithm, and then moves to another step, etc. So that is how you should expect an algorithm to be wired, right? So keep that picture in mind. However, Wittgenstein, after he has written the Tractatus, was a kind of frustrated by what he has done, because here we go back to what initially he had in mind to do. So initially, as I said, he wanted to do philosophy. He wanted to produce for you something that is unthought and later turn it into something which is necessary to be thought. So he wanted, as I said, to express the sense of the word and to exhaust the word by enumeration. But obviously, it's not enough to say that I have produced an algorithm of the word, like the trees that I showed you. Philosophy has chiefly to be reflexive about what it's doing. That's why you need a philosophy book. You need to be reading something and reflecting as you go on what you're saying. So it's not enough for thought to have mapped out the world in logical facts. The thought needs the other layer where it knows that by doing so it's doing philosophy and actually producing the sense of the world. That's what drove Wittgenstein to saying real afterwards, not in the Tractatus, but I think in one of the prequels of the Tractatus, that making sense, the fact that I know that I'm trying to be a philosopher and make sense of the world must lie outside the world, meaning outside the logical tree of the world that he has mapped out. And this is why he says, my work, what I have achieved as a philosopher, really consists of two parts. The one presented here, which is the Tractatus, plus all that I have not written. Meaning all of the things that I had left out of it, which actually are left maybe for you, the reader, to engage in understanding with that work and really understand that it's the philosophy world, and really, in that sense, understand the word and write it also on your own. And the other part, the part that I have not written, is precisely the important one, he says. So already in Wittgenstein, there is this tension where, because you have mapped out everything, you have maybe left out the most important thing, meaning the reflection on what you have just done, right? And now Koffer, who is interpreting Wittgenstein, agrees with him that language and setting the language right is maybe the key to all metaphysical knowledge. So trying to sort out the metaphysics and trying to sort out the problems may be down to setting up the language right. Language is the vehicle through which we recognize metaphysics and name metaphysical knowledge, but not in any previously imagined matter. This means not in the matter which is written in the Tractatus, meaning just logical fact. What we need is semantics, syntax itself, the syntax of the computer code of the logical tree is not enough. We need the other layer, which is the level of interpretation. So the truths of metaphysical knowledge ultimately, which according to Koffa, remember that his book is the semantic tradition. These truths, which are the ultimate truths, emerge not from the acknowledgement of fact, not from the acknowledgement of the syntax that Wittgenstein has mapped out in this tree, because the facts are contingent and could always be otherwise, but through the recognition of meaning, through the recognition of what I have just accomplished by doing this. So Koffa actually bridges the gap between analytical philosophy and Kantian philosophy by saying, actually, Wittgenstein, he has produced like maybe an image, because nobody believes that maybe the word is described that Wittgenstein has done, but what he has done is an attempt to describe the bounds of meaning and the bounds of language, and this is a Kantian notion, trying to, for reason, not to go outside its bounds. So we agree that we don't want to engage in metaphysics which is completely unwarranted, if you will, and outside the bounds of reason. However, by setting up the bounds of reason, you are reflective. You know that you have set up the bound of reason. So the bounds of reason do not only mean what's inside the bounds, it means the reflection that we are describing a limit here. So this is a Kantian kind of gesture. And Koffa recognizes that perhaps Wittgenstein is the most Kantian of all philosophers, contrary to what the tradition that followed quickly after Wittgenstein has tried to disconnect him completely from continental philosophy. Okay? And by the way, in the Tractatus itself, there is already, as I said, this attempt to exceed the bounds of what he has already mapped out. And this is why Wittgenstein, in the last propositions of the Tractatus himself, writes the following. He says, anyone who understands me now in the second order understanding, and eventually recognizes my propositions as nonsensical when he has used them. Why? Because he is in the business of saying metaphysics is nonsense. But what he has just done is metaphysics, because he's telling us that the proper way of doing things is this way. This is the metaphysical statement. So therefore, it is self-defeating in a way. And Wittgenstein wants us to recognize this system will destroy itself. So anyone who understands me eventually recognizes my propositions as nonsensical when he has used them as steps to climb beyond them. So he must, so to speak, throw away the ladder, throw away the book, after he has climbed up it. So again, here you see that Wittgenstein explicitly is saying that the whole Tractatus is merely an image or merely a sequence of thinking that he is putting in your hands for you to produce the understanding beyond the Tractatus and throw it away and maybe reboot. Maybe at this moment reread it, etc., and get engaged into that circle that I had described. Okay? And Elie Friedlander, who first of all said that the essence of the Tractatus lay in the enumeration of facts, now that he wants to interpret the last proposition, says Wittgenstein begins with the fantasy of the exhaustive book and ends with the fantasy of the book that collapses into nothing, because he himself is telling us to actually throw the book away. This means that the Tractatus is an impossible work, because according to its own logic and its own light, you have to throw it away. Logically speaking, the Tractatus doesn't exist, because it defeats itself and throws itself away. And this is the important part. For thought alone, as if there was something else than thought that we should at some point invoke. So for thought alone, the Tractatus is a lost cause, because it's impossible, it dismisses itself, it throws itself away. So for thought alone, the Tractatus is a lost cause, and he continues by saying, here we find the reason why it's necessary for the Tractatus to be written. This is the conclusion that I wanted to show you. So thought itself, the logical tree itself that Wittgenstein has produced for us, ends up defeating the book, and you end up, if you follow the logic and follow thought alone, and by thought here I mean the logical tree, the provision, the algorithm that Wittgenstein has set up for us in the Tractatus, you end up losing the Tractatus and it destroys itself. And this is why there has to be an excess of the thought which is writing. So it's not because the Tractatus is going to be lost that you need immediately to write it, because in writing it you keep it safe. No, not only that, but it's also because, according to me, it's only when you subtract the possibility and you subtracted the logical tree that you end up with that residual, which is the necessity of writing. So it's here to me that the writing, in the sense where one instance of which is, as I said, the fact that the Tractatus is written, therefore that it opens us the space where you dismiss it, but you read it again, etc. So this is important. So that's an instance of writing. But to me, what I can take away of it is this necessity of setting up in another dimension than possibilities and the logical map of the word, the writing dimension. Okay. So to recapitulate, I can maybe spend 10 minutes now trying to wrap up what I have said so far. Even as I said earlier, I anticipated a lot of the things that I wanted to tell you about the market. So I'll wrap up a little bit and maybe show you 2 slides in the end, why I can go back to the market and show why the logical tree of possibility and probability has to be exceeded. So algorithmic trading and all that, and the whole idea that the future is predicted, has to be exceeded by the writing dimension, which in my case, in Pierre Ménard's case, is the fact that he's writing the Quixote. In Wittgenstein's case, is the fact that it's necessary to write it. And in my case, it will be the market of derivatives. So to wrap up, what we have shown so far is that it's shown or illustrated. Is that it's impossible to predict the future. Why? Because the future is by definition the unpredictable. The future is not playing dice just between 6 faces. The future is the event that is completely going to change the game on me. So it's what's outside the prevision. So prevision, vision, and hence the idea of light have to be dismissed. I cannot deal with the future by projecting light and projecting probability tree and probability states on it. So there's something other than light that should be invoked. However, so it's impossible to predict the future, but it's necessary to write the future, because once you take away from the future all the algorithmic vision and all this hope of predicting it, you are left out with something material, which in the case of Wittgenstein is the book, and in case of the market is, as I will show in the last 2 slides, the market of derivatives. And in the case of Wittgenstein, as I showed, it becomes necessary to write it when you take away the hope of algorithms and provision that you had. And this takes me back to Blanchot again, who was interpreting Mallarmé's poem at first, to that sentence in Blanchot, which also has arrested me and interested me a lot. He says, Blanchot, speaking of Mallarmé's poem, that the necessary book is subtracted from chance. Remember, I told you earlier that you should no longer think of necessity as being the summation of possibilities, which is the necessity by the lights of Leibniz and by the lights of the people who want to run out optimizing algorithm. You should think of necessity as what remains once you have subtracted from your whole thinking, the whole schema of thought of possibility. Okay. All right, so I'll spend now. Do you have questions at this point? Because now I will show you 2 things, which we can expand, if you will, which are how, now technically speaking, in the market, the probability trees and algorithmic trading and the whole thing that I want to criticize is put into default by reality, therefore by the future, and why an alternative technology, which is the technology of writing, and which in my case is the technology of the market of derivatives, is needed. Do you have questions, or I proceed? Okay. So I will alternate here between 2 visions, the predicting the future, the probability tree, which I'm arguing against, and the writing dimension, which I'm arguing for. Probability tree is the following. So we go back to what we have seen in Wittgenstein. And here the argument is actually, I will try to make it quick, but I've already more or less expanded on it. I told you that probability and recognizing states of the world is an abstraction. So the world is by definition concrete and unmeasurable. You cannot measure the world because it's so concrete that anything whatsoever can happen in it. Anything whatsoever is maybe already contained in it. And in order to be able to represent the world and to do probability theory, you have to abstract away things that you deem remarkable from the world that you name as being your states of the world. So probability theory, even if you go into the formalism of probability theory, when it was formalized in 1933 by Kolmogorov through measure theory, it first of all starts with not one thing, two things. It starts with something which is the sample space. That is a very mysterious notion that really, they just mention it in the books and forget about it directly. And then he constructs over it something that we call the event space. So sample space is, again, if I'm playing die, is the thing that is going to produce for me the sample every time I sample the die. So it's the actual concrete physical situation that's going to be triggered every time I throw the die. So in that sample, everything that is concretely involved there is potentially involved. So my hand, the word, gravity, the meteorite that may fall, all of that is part of the concrete situation. However, because I am interested in playing dice, I want to abstract from those only what I will call the events that will matter in my game, which are the faces of the die. Okay? So you may throw twice the number 6, so we'll have had two samples. Maybe in the first sample it was sunny, and in the next sample there was a cloud, but no matter, I will not sample in my probability tree the fact that the first trial there was sun and the second, because I don't care about the weather. I'm just sampling the events, and therefore I'm abstracting from the outcomes that the word can produce for me every time I'm triggering a device. I will abstract only the stuff that interests me. But if you want to formalize probability and to make probability the actual science that is needed in actual in the study of markets or in the study of physical systems, you have to link it to the physical world, and this is why the sample space is a necessary layer in the construction. And formally, what you say afterwards is that I don't care about the infinite concreteness of the sample, and by that I mean the infinite things that I could have distinguished but that I will not distinguish. All I will care about is all those samples, bringing them in one abstraction, which is the face number 6. All the samples that will help bring up the face number 6, will all of them be subsumed and abstracted by the number 6. See what I mean? All the samples that the word, look at the word from the point of view of God. So it's as if God knows everything that's happening in the world, knows the word in all its concreteness. But I, the finite human being, I'm grouping all the samples which are distinguished by their infinite concreteness into only abstractions, which in the game of dice are the faces. Okay? So I do this, and I end up saying that the word of playing dice reduces to only 6 faces. In this case, I've only pictured 5. And I start wiring my probabilities, and it's only because you have abstracted from the concreteness and moved to the abstract level where you have only kept the remarkable things that interest you, which is the number of points that you have on the faces, that I can then measure the probabilities of them. But I would never be able to measure the probability of a sample, because who knows what is the ultimate die that is throwing the sample, where gravity can be different, where the light can be different, the clouds can be different, etc. You see what I mean? Okay? So it's only then that I can set up probability theory and start linking my algorithms together and assigning probabilities. Okay. But then, as I said, what happens is that ultimately the concreteness of the word is going to go back on you at some point. Remember when I said earlier that by far, if you are now looking into a concrete situation and not just wiring an algorithm, if I'm looking in a concrete situation like the financial market, financial market is not gambling in dice, it's linked to the concrete world. By far the things that can hurt me most is things that were not mapped in my map, my logical map, things that I did not deem were relevant and then become relevant all of a sudden because suddenly a meteorite hits and I can no longer play and I die, so that it's by far the most significant event. But then, out of this infinite, if you will, reservoir of things that can happen, maybe the next stage, the players of die will start sampling probabilities of meteorite hitting. So what's important also in that infinite concreteness of the world is that of course it is kept invisible and implicit, if you will, but it gives me an infinite potentiality to magnify the tree and to start sampling other stuff that can happen to it. Okay? So probability tree theory and algorithms that discover new contingency can reprogram themselves and can enhance the tree as they go. And this, by the way, is something that we do constantly in finance. So in finance, one of the major assumptions is that volatility is constant, volatility which is some factor which is essential in the Black-Scholes formula. But it turns out that if I'm actually trading, volatility has to be stochastic, so I can enhance my tree and start sampling stochastic volatility. No matter whatever I do, even if my algorithm has the power to take in the new contingencies that it hasn't mapped out previously, it will still be vulnerable to one last contingency, which is the contingency of its own failure. So no matter what you do, the algorithm itself can fail, and we have seen in the flash crash, for instance, is one case where the algorithmic trading algorithm has failed. What I'm trying to say here is that no matter how complex I can make the tree, even if I start sampling other dimensions where meteorites start falling on Earth, etc., I will always end up with another tree, more complex, but it will still be a tree, and in no way the tree can branch out to a branch where the whole tree is abolished. Because the tree is supposed to be a description of the whole world, so it is exhaustive. It cannot be conscious of something that can happen to it and destroy it. So that, to me, if I want to put it in a word, why? Remember the tractatus that you want to throw away, the tractatus that abolish itself. So this is why this whole logic is always blind to something that would defeat it. The algorithm is always blind to the failure of the algorithm, because it's an algorithm, by definition, it can fail. So that's a predicament. But then I argue there happened a miracle. Money. We invented money, and therefore we invented stock exchange, trading, derivatives. And I will try to show you here, and it will be the last slide, why moving now to how we fix the problem and moving now to the other dimension, which is what happens outside the probability tree and outside the algorithm, the dimension of writing, why the market happens, and through money and through writing, therefore through writing of contingent claims, it can give me the excess that I need in order to be as massive as the future and to not predict the future, but write the future. So have already been in contact with the future as if I had produced a book which was potentially as rich as the future, is this picture, which as opposed to states of the world, I call marks on paper. So this is the invention of the contingent claim. I call it here the contingent claim. So instead now of wiring a probability tree where I'm thinking in abstraction about states of the world and things that can happen, but I'm always missing out the part of the infinite concreteness of the world which may break out all of a sudden and kill me. I managed now, and so the picture earlier was a straight picture, which was not, because it was exhaustive, could not be aware of what's behind the screen, if you will. Now I will tilt the picture and involve some depth in the picture. How can I do that? By inventing paper, inventing money and writing. I will now invent a piece of paper which pays you €1 if the face 6 appeared in the die. Another piece of paper which pays you €1 or £1, $1 if the face 5 appeared, etc. So I invent 6 contingent claims, which when you throw the die, will pay you each one $1 or €1 should that face appear, and 0 otherwise. Okay? As opposed to sampling the states where we have 1, 2, 3, 4, 5, 6, and assigning to them probabilities. So here we move to a schema of thought, to a new technology, where there are pieces of paper, and we are going to trade them and assign prices to them. Now what I claim is that by the simple miracle, I've written like 2 chapters of my new book on it, so I will not expand a lot, but it's already apparent in the picture here. It's because this piece of paper on which you have written what to pay out in all scenarios is written. There is one thing that you cannot encode in it, but that you don't need to encode on it, is the abolition of the paper itself. You may lose the paper, or it may burn. If the meteorite hits you, the paper will disappear. So the paper, by the sheer fact that it's material, as opposed to being a pure conception in the mind of a computer or in the logical tree, because it's material, it can disappear itself. So it has wired in it, in a kind of implicit way, the possibility, I don't want to call it a possibility because I'm talking about the writing dimension, of its own abolition. It's as simple as that. But if you think about it, that argument is, according to me, enough to generate the whole business of trading, derivative, and all of that. Because in a way, now that you own that piece of paper, you become almost bound up with its material fate, up to and including a possible future where it might be abolished and the world ends, etc. Because you already have it, or you already have as its other face, even though it's not wired in it, the end of the world, because the other face of the paper is that it disappears. It's wired in it because ultimately you need to go ahead and collect the money after the die has been thrown. If you are buying a derivative, you need to wait until the expiry of the derivative to collect your payout, because otherwise you won't collect the money, and because then things can happen which were not explicitly wired in the payout of the derivative, such as the world ending, or the market ending, or even money disappearing, etc. This could have, these things out of the concrete infinity of the world can happen. This is, as I said, all collected in the fact that the paper has another face that you may no longer have if the end of the world happened. So it's as if you were already in contact with that other face of the paper simply by owning it. And this is why, according to me, the only way that you can discount that, if you will, in a kind of decision tree, is no longer by decision tree, because the decision tree cannot be sensitive of the face that abolishes it, is by turning the other face of the paper today to somebody else. This is exchange. You just hand it over to somebody else. This is how price is created. So to me, the major genesis of the market, I may be wrong, but I'm happy with that interpretation for now, is that the fact that it's written piece of paper has as its other face the massive future that may happen to it, which I don't need to specify enough if I think that it could be the end of the world and massive. And because of the existence of that matter, which is the piece of paper, by necessity it has this other face, and this translates immediately today. It doesn't translate, it's actually the same thing to say that I can exchange it today, because material you need to exchange with somebody, and meaning the contingency of exchanging it today is potentially a reflection of the massive contingency of whatever can happen to it later. That's what I'm hinting at. And I can show it to you by numbers now. If you now bring into play the fact that as soon as you start exchanging it, that to me is the stock. That is the creation by the Dutch. Because the contingent claim is also a stock. A stock is contingent on the fate of the company, etc. So a contingent claim to me is a very generic, everything is contingent. Even a bond becomes contingent because the bond is contingent on the fact that the company doesn't go into default. So even a bond can have as its other face things that were not written in it. So everything is contingent claim as far as finance is concerned. So as soon as I have demonstrated to you that this invention of money, which is simultaneous with the invention of writing, which is simultaneous with the invention of the exchange, so immediately the stuff becomes exchanged. Immediately, because it's exchanged, there is no value anymore and no valuation tree and no algorithm. The price becomes the only value, and it is random. And immediately this brings into play the derivatives. And we end up with the picture that I started talking about earlier. And this will be my last couple of slides. So this is a quick reminder of what the vision of algorithmic trading is. The linear vision, which evolves through time, of a certain stock that is trading randomly in time. So this is, you are familiar, this is how the screenshot of anything trading behaves. And the simplest of mathematical ways of expressing it is by Brownian motion. And this is what gives algorithmic trading its right of existence, because Brownian motion is so random that no matter the scale that you zoom in into the picture, it will remain random. That's why you have high frequency trading. High frequency trading is that it's random at any time scale, so that's Brownian motion. So that's one view, the view that I'm dismissing, which is the time dimension, which is always single, as opposed to this view, which is what people are not really familiar with, and it is at the heart of my trade, and at the heart of what happened after '87, when options became independently trading assets. So this here is a snapshot, so there is no time dimension here, there's only space. I'm looking instantly. this was taken on the 5th of May of 2014. I'm looking at calls and puts, remember calls and puts, written on the Euro stocks, which is the equity index equivalent to the S&P, trading that day. So there are, if you will here, each vertical blue line is at that instant what we call the bid and ask spread that the market maker of option is showing to you at that instant to buy or sell to him that option. So he's showing to you a bidding price, meaning he's prepared to buy from you that option at that price, and he will sell it to you at that other price, the other vertical price. And the two dimensions that I'm describing here, spanning from 11 days to 4.6 years, are the maturities of options. Because remember I told you that options have a finite lifetime, so you have options in the exchange which have standardized expiry dates. So options trading that will expire in 1 week, that 1 month, 2 months, 3 months, 1 year, etc. So these are, all those lines here are the different maturities. So the last one here is the one that will expire in 4.6 years, and the first one here, May 14, and I'm here in May, is like the 11 days. So that's the time, the maturity dimension of the option. And the other dimension is this one spanning here from 3,300 to 5,800 is the predetermined price, as I said, at which you are guaranteed to buy this underlying equity or sell it. So you have at once the two dimensions, spatial dimension, which are written on the contract. And this is a snapshot where we have 1,200 of those options that are quoted instantly. Now, if the prediction algorithm that I showed you earlier of Brownian motion was valid, you would observe a flat surface here. All the options that are trading on the Eurostoxx would reflect a single volatility number, but it is not the case. From 87 onwards, every option is trading at a different level. That's why this is a curve here and not a flat surface, than its neighbor. So every option is seeing volatility differently to its neighbor, when volatility was supposed to relate to the single underlying equity, which is the Eurostoxx. So this is here the major problem of finance, which is not solved until today, which is called the smile problem or the recalibration problem, where even though the theory tells me that I have one Brownian motion, one volatility number that is supposed, according to Black-Scholes, to govern the prices of all options, turns out from 87 onwards that every single option, even though it's written on the same underlying as its neighbor, sees the world differently than its neighbor, reflecting another volatility than its neighbor. This is simply telling you that by the sheer exchange of options, the contingencies of exchanging it is in excess of the algorithmic tree that wants it to only be reduced to one number. And this is the reality of option prices. So what happens next is, of course, people will say, well, fine, I will make volatility stochastic, and we have trees that are more enhanced than Black-Scholes. And typically in my company, we develop algorithms where the volatility is made stochastic. And I can then build a single tree that can make sense of all those options. So that's possible. This has been solved. I can show you now a tree which is more multidimensional, with multiple values of volatility that can make sense instantaneously of this whole surface. This is another view of the same surface. But now that options have become tradable themselves, there's the other layer that I mentioned that comes into play, which is the fact that options have been written on options, and now you have volatility index, which is being traded as well. The volatility index is actually a bundle of options as the ones I showed you before, which itself becomes independently tradable, and you have options written on it. So you have options now trading in Chicago, say, on the options, therefore, so on and so forth. I have to keep expanding my algorithms always in the writing dimension and always outside any schema of thought where I had framed the world in possible states. Thank you.